The race for AI dominance is heating up, and now Wall Street has a new company to watch. According to multiple media reports, Anthropic has begun investor meetings as part of preparations for a potential IPO. On the other hand, OpenAI remains one of the world's largest privately held AI companies, and both are among the leading companies developing next generation artificial intelligence. So, why is Wall Street watching them so closely? Is this simply another AI headline, or could it mark the next big chapter for the AI industry? In this video, we will compare Anthropic and OpenAI, explain why investors are paying attention, and look at the facts behind the headlines. Let's dive in. Before we begin, this video is for educational and informational purposes only. It is not financial, investment, or legal advice. Please do your own research before making any investment decisions. Let's start with Anthropic. Multiple reports indicate that Anthropic is already meeting with investors to gear up for a possible IPO. It's a strong signal that the company is laying the groundwork for a public listing. That does not mean an IPO has been confirmed. A public offering would still depend on regulatory requirements, company decisions, and market conditions. Until an official registration statement is filed and the company announces its plans, the timing and terms of any potential IPO remain uncertain. But these reported meetings have certainly caught Wall Street's attention, and that's not surprising. Anthropic isn't just another AI startup. It's one of the leading companies building generative AI. Its Claude family of AI models has become one of the most widely discussed competitors in today's AI market. That also makes Anthropic one of OpenAI's closest rivals. So, this story isn't only about a possible IPO, it's also about the growing competition between two major AI companies. And that's where the story gets even more interesting. Now, let's talk about OpenAI. Even though today's news focuses on Anthropic, OpenAI is impossible to ignore. It helped bring generative AI into the mainstream through ChatGPT. Its technology is used by millions of people around the world. Businesses are building AI products around it. Developers continue creating new applications with its models. Unlike Anthropic, OpenAI is still a privately held company. It has raised significant funding from strategic investors while continuing to expand its commercial business. That means retail investors cannot buy OpenAI shares on public stock exchange today. So, why compare these two companies? Because they are competing in many of the same markets: enterprise AI, developer tools, foundation models, and commercial AI services. As Anthropic reportedly moves closer to a potential IPO, comparisons with OpenAI naturally become more important. So, why is Wall Street paying attention? It's about much more than AI excitement. Investors are watching real business developments. Artificial intelligence continues attracting significant investment across the technology industry. Companies are moving beyond research. They are launching commercial products. They are signing enterprise customers. And they are investing heavily in AI infrastructure. Wall Street is also looking at the fundamentals. Things like business models, revenue growth, cloud partnerships, AI infrastructure spending, and long-term profitability. These business factors often matter just as much as the technology itself. That's why this story goes far beyond one company. It's really about the next phase of the AI industry. So, how do these companies compare? Both are leaders in generative AI. Both build advanced foundation models. Both serve enterprise customers, and both are competing for a larger share of the AI market. But they also have important differences. Anthropic has built its reputation around AI safety and enterprise-focused solutions. Its Claude family of AI models continues expanding across business applications. The company also has strategic partnerships with major cloud providers. According to multiple media reports, Anthropic has begun investor meetings as part of preparations for a potential IPO. OpenAI follows a different path. It's the company behind ChatGPT. It has created one of the world's most widely used AI platforms. Its products serve both consumers and businesses. The company has also secured substantial private funding from strategic investors. Unlike Anthropic's reported IPO preparations, OpenAI remains privately held. So, while both companies compete in the same industry, they have different ownership structures, different funding histories, and different business strategies. And that's an important point. Private company valuations do not necessarily predict future public market performance. So, what comes next? Many market participants are focusing on facts rather than speculation. They are watching for official IPO filings, financial disclosures, revenue trends, customer growth, competitive positioning, and broader AI adoption across industries. These developments often provide more meaningful insights than market speculation. As more official information becomes available, investors will likely continue evaluating these key business indicators. So, here's the bottom line. Anthropic's reported IPO preparations have put the company firmly on Wall Street's radar. At the same time, OpenAI remains one of the most influential private AI companies in the world. Together, these two companies are helping shape the future of artificial intelligence. Whether you are interested in AI, technology, or the IPO market, this is a story worth following as new information becomes available. Now, we would like to hear from you. What do you think Wall Street will be watching most if Anthropic moves forward with its IPO? Share your thoughts in the comments below. If you enjoyed this fact-based breakdown of the markets, AI and investing, consider subscribing for more updates. Thanks for watching and we will see you in the next video. Thank you.